Today, months of supply is being quoted in sometimes weeks, even sometimes 11 days, 12 days.
Oh.
And for this to be like a normal, healthy market of 6 months supply, there would be 2.6 million existing listings on the market. There's around 500,000.
So no, hold on. So you're saying most of the country, the active inventory in August of 2023 is 40% lower than August of 2019? That's what this chart says? Folks, I don't know if you missed it, but there was a seminal piece put out by Lance Lambert in Fortune where he was interviewing the CEO of KB Homes. I'm not going to steal all the thunder, but what I will tell you from that article is it's a good time to be a builder. Lance, how do you get these awesome interviews lined up? CEO of KB Homes and so many others. It's amazing to watch. Good for you.
Yeah, it's a lot of fun, and it just speaks to the power of the Fortune brand. It's a 90-year-old publication. It predates Bloomberg. A lot of these financial companies, and a lot of people like to talk to us. So I feel very blessed in that way. Let me pull up the story. So I actually did two. I did a deeper interview with him, and then I did the spinoff one, which you were talking about. So let me share the spinoff one first.
Okay.
So pretty much the gist of what he was saying is that the housing market inventory is so scarce that builders are going to be in the driver's seat for years to come, is what Jeff Metzger was telling me. And what he told me is that today, months of supply is being quoted in months and sometimes weeks, 1.2 months, even sometimes 11 days, 12 days.
Wow.
And for this to be like a normal, healthy market of 6 months supply, there would be 2.6 million existing listings on the market.
Yeah.
There's around 500,000, especially in the single family.
So that's a little less, Lance, is it?
So you could call it a little less. And he said of that 500,000 single family listed, a chunk of that isn't even livable. It's homes that would have to be acquired and torn down and rebuilt. So the resale stock, which is our biggest competitor, has no inventory, is what he told me. That's his.
Yeah, and this was such a well done article because not only do you have, inventory that should be torn down, I would argue you also have a big chunk that is wish pricing, which hey, if I get my price, I'll take it. Otherwise, I'm not moving. And then, as you highlighted in the luxury market, you have some luxury listings that are just completely out there. So this 500,000 active listing for single family home is something significantly less than.
Yeah. And I think every bit helps, like the market kind of days on market moving up, and even more like the bad stuff sitting and more of the higher end stuff sitting, and the wishful pricing helps too, because it could slow the market down.
Yep.
We also haven't seen it work in a way that's progressing the market upward for inventory.
We have not.
We started to last year, but that was just the shock. That was just the fact that during the very height of the boom, homes were just like moving off the market. And so the initial move up in inventory was just because that stopped for a little bit.
Yeah, there was a demand shock. So people just stopped. And I talk to people every week and they're like, yeah, nobody's showing up at open homes. That lasted 2 or 3 months. And then all that inventory was gone in February.
Yeah, well, and that's why some of the data got that initial tick up real quick in the beginning of the year.
The transaction data, yeah.
There was a little bit of inventory there, but it got absorbed as the market kind of stabilized a bit there relative to supply and demand. So he said our historically biggest competitor doesn't have any inventory, and he's talking about existing resale. And on the build side, with all the supply chain issues and everything we went through, we never caught up. So there is a shortage of new homes and of resale homes, fueling a lack of inventory. At the same time, we have a strong demographic demand from millennials, and Gen Z is now hitting home buying years. So when you have a strong demographic demand and no inventory, even though mortgage rates have moved up, demand is strong enough that buyers adjust to rates and sales remain robust. He means
Now,
new homes.
is it? I don't want to disparage KB Homes, so hopefully it's not taken that way. But it's fair to say that KB Homes is a lower priced home builder than maybe a Toll Brothers, for example. That's not crazy to say.
Tolls at the top, yeah, KB, yeah, a little mix there, but yeah. And in Austin, he was saying that their price point is 300 to 350. And so
Okay.
while they put down a bit, they haven't seen the bigger drop offs like you have at the top of the market,
Yeah,
just
again,
because
it's
of the price point.
exactly. That's something you uncovered last week with your charts. People can go back and look in the playlist. Above the median is acting very different than below the median, simply said. And if KB Homes is playing at the lower end of that spectrum, they're going to be doing quite well with no competition, I think.
Yeah. And this chart, one of the most important charts in all of housing over the past year, it's inventory now relative to pre-pandemic. And how I do
Oh
it is I
my
just take a
gosh.
month in 2019. So everything that's dark red is down at least 40%. And so
So no, hold
every
on, hold on, hold on, hold on. So you're saying most of the country, because this again, there's a lot of empty dirt there, but most of the country where there is a housing population, the active inventory in August of 2023 is 40% lower than August of 2019. That's what this chart says.
Yeah, and if you go to
Oh my
Connecticut, down
gosh.
79% in Hartford, down 74 in New Haven. I mean, Providence down 69. New York, the biggest MSA in the country, down 50. Springfield,
Wow.
Massachusetts, down 66%. Boston, down 58%. Active listings, there are no active
That's
listings.
that this chart is shocking to me. And I
Yeah.
look at housing every day. This is shocking.
And then you do have the softening places in Austin and some of these places in Texas, Waco, and then a couple here, and then over into Idaho and Utah. You have some softening definitely that we've seen, but most of that inventory bounce occurred last year, and we've kind of just floated
Yeah.
around. Boise only 9% off. Yeah,
Wow.
I mean, you go from Indianapolis all the way to the coast and then north of Nashville, there's almost not a single market that's not at least down 40% other than Fort Wayne, which is only down 24.
So can you do me a
Um,
favor and find Fresno, California? And because I look at that market every day and I have it's down. I just don't know how much.
down
Probably to the right.
48%.
There it is.
Yeah.
48%. My gosh.
Yeah.
Okay.
I mean, some of these on the coast right there, I mean, wow. LA down 51. When I talked to KB Holmes, CEO, he
Mhm.
said that their softest market in the country is actually Denver.
Okay.
And the reason is it's not that resale and existing is so soft, it's that the build side is softer because the prices got so far out of whack with the existing market. So
Got it.
normally how they price is down to a zip code, 15% over resale prices is
Got it.
how AB prices. That's their premium. In Denver and during the boom, they were getting up to 30%. And so
Aha.
out of whack. And
Yeah.
so that speaks to how nuanced the housing market can be, where
Yeah.
it can be much warmer in the existing market, and then the new home market can be really out of whack. In some ways, Austin has been like that this year, where a
Correct.
lot of builders cut prices in Austin 10, 15, 20%. And so this year, plus their incentives, they've enticed buyers back in, and now they put the existing market at a disadvantage.
Right.
Uh, and so he said his stronger markets. Well, one, he said for him, one of the places that gets talked about in the news a lot, but for him has been better is Las Vegas on a relative to the national discussion. It's been better
Sure.
for him. But the strongest markets for KB Homes are Florida, all of Florida, just all of it, Jacksonville,
Yeah. Just
Tampa,
the whole thing, the entire state.
and then Inland Empire.
Yeah.
And I think what he was insinuating in that discussion with me is that because of LA and Orange County and all of that, the Inland Empire is seen as more of an affordable
Yeah, it's a
pocket.
trade down like we talked about. Yeah, absolutely.
Yeah.
I one of my weekly guests plays in that market, so you're absolutely right.
Yeah, and he said there has been no softening of demand
Nope,
inland.
none.
And he's absolutely right in terms of the lack of resale existing inventory. I don't even really know how this is a debated topic, because you look at the power of the data where it's like, okay, you see the markets like Austin that have kind of gone back, and that is a softer market.
Hmm.
And then these other parts where it hasn't even come close are much, much warmer this year. So
Mm.
if anything, I think this chart speaks to the power of active listing data, which to me, that's the one that I care about the most because it's a proxy of supply and demand. It really gives you the balance of
I
where things
I
have shifted.
agree 100%.
And so that's one of the chats. That's like a spinoff.
Hmm.
In the bigger discussion with KB Holmes, he had said he thinks the housing market and home prices have bottomed, but he
Hmm.
said if they haven't, the key metric that will warn us is months of supply. And so what he
Okay.
said is if they see months of supply suddenly move up, they're done raising prices in that market. They just
Okay.
stop and they
They
kind of
stop.
focus on sale. And so that's really, watch active listings. That's what the
Hmm.
builders are watching too.
Yeah, I
Um,
mean, it's funny how you
let
just
me
to tie this out with my audience. So watching active listings, absolutely. But again, folks, remember with the variable that I'm looking at to write disrespectful offers is actually days on market. Logan from Housing Wire talks about it being a savagely unhealthy market when days on market's a teenager. I think by Q1 of next year, we could have a days on market of 40 days. So
interesting.
I'm writing, that's my metric. Go over 30 days in my market, you're going to get probably a disrespectful offer.
Okay, so let's start with clearing one chart up.
Sure.
So remember the builder cancellation rate charts.
Yes.
And I shared these, and I think a lot of people, when they see these, they assume that it means the share of homes in backlog that are falling out.
Hmm.
So when you see this chart, KB Homes, they got up to 68%. And so builder cancellation rates during the bust, I went back and looked. Some of them would get up to 50, 48, 60%
Hmm.
close sometimes. 68 is really off the charts.
Yes.
And what he said is that how it works with the SEC reporting is it's not cancellation rates as a share of backlog. It's
Mm.
cancellations as a share of gross orders, new gross orders.
Oh,
So
okay.
if
That makes
gross
sense.
orders eat shit
Right.
and your backlog doesn't even, or your cancellations don't change, your
Yeah.
cancellation rate goes off the charts.
Right.
So that's what
Makes sense.
happened is that
Ah.
the cancellation rates didn't necessarily get anything close to this. It's the gross orders collapsed
Yeah, we
briefly.
just saw that makes perfect sense because we talked about it in existing home sales Q4 of last year. People put away their wallets.
Yeah.
So again, if cancellations didn't change, but net new orders didn't happen, you get a shooting high. Oh, that's genius. I had no idea.
So so some of the places that were seeing more cancellations were the builders that went out and focused on getting more gross orders. And so they were doing price cuts, and people in the backlog were like, what the hell are
Yeah.
you're giving them this deal? I want it. And they got out. And so, ironically, some of the places with the lower cancellation rates would have had the higher cancellation rates as a share of backlog. And the
Right.
places with the really high cancellation rates, like KB Homes, is because they weren't doing price cuts and incentives last year. And
Mhm.
so their gross orders knew what was coming in collapsed.
Yeah.
So,
The other thing about cancellation rates, and again, you shared this with me, I think last week. Um, a lot of folks assume cancellation rates meant builders were losing margin and taking losses, where in reality, some builders had cancellation rates and it was a net positive. Is that true?
well, let me get to that too.
Oh, there
So
you go.
he admitted, hey, we did have higher cancellation rates. Nothing like what you see in our earnings, because that's as a share of gross orders, but we did have some. And what he was saying is that It's up to each buyer to lock their interest rate. And if they elected to not lock their interest rate, I'm reading a direct quote, and play the market, so to speak, and then rates went from 3.5 to 6.5, in some cases, their payment changed so much they either didn't qualify or no longer wanted to purchase. And we did have some of that. It is emotional if their payment moves the way it did last summer, where as much as they want the home, they say, I'm not paying an extra 600 or 800 per month for the home. And so they go out.
Mhm. Makes sense.
And what he said is that, so we had buyers that would walk. When we start the home, the deposits are non-refundable. We had buyers walking away on 20,000, 30,000 earnest money deposits because they no longer wanted the home, and it was an emotional cancellation. If you look at our financials, this is KB Home CEO speaking, we had millions of dollars in retained deposits on those cancellations. So they made money on all the cancellations because they got to keep the deposits and then went out and resold. And so KB Homes, unlike some of these other builders, they were later to the game to get their sales juiced up this year. And the reason being is that they operate with the higher backlog relative to some of the other builders. I mean, you look at them here, they had a backlog of 112, over 12,000 homes in Q2 2022. And they were able to bleed that to 7,000 at the beginning of this year. And at that point, KB Home CEO told me, entering this year, once their backlog had been bled, that's when they cut price and offered incentives. So they waited to bleed the backlog back to pre-pandemic levels before rolling out the incentives and chasing gross orders.
Okay.
And the reason is they didn't want to threaten their backlog.
Makes perfect sense.
So that's why they waited. And so he said, at any given point, we have a large number of homes in backlog in the system. So when sales slow, we have a large backlog and we're sensitive. This time last summer, when rates ticked up, our backlog was 11,000 homes. They were very high profit margins. But if you do things, cut prices and chase sales and go find the market, you put 11,000 homes in backlog at risk of adjusting price on those homes as well. And he said, when we turned the corner into January and we bled the backlog down, and we were then in a position where selectively on a community by community basis, we would pull the lever, whether it was financing, adjusting price, or offering different products or whatever to get sales going again. And that's when you saw us sequentially, their orders go up in the first half of the year. And give me 1 second.
Sure.
And so he told me that peak to trough, their prices fell about 10%, and they don't like to do as many of the incentives, he said. Let me find this. Let me find where. Give me a second. This piece is like 2,500 words, 4 charts. If anybody is really into the new construction market, this is a great piece for them.
Yeah.
He said, in our business, it's primarily price cuts. We don't do a lot of incentives. We believe in giving the buyer the best value. So we typically do it in price if we're going to adjust. So he said they went down 9-10%, and now they're down about 5% from peak. And then he thinks by next year they could be back to peak. It's a little bit a different story when I talked to D.R. Horton CEO. He said they cut price nationally about 6%, but then they also, on top of that, were doing a buy down of about 1 full percentage point, 30-year fixed. And so they kind of leaned more into the buy down side. It all varies by builder, and that's why these new home prices, a lot of them are just junk because we don't really know. We're not as informed.
It's not a net number.
It varies so much by builder and community to community basis, and plus what happens on the private end of the market, which is still 50% of home building, is
Hmm.
a little less known because uh, they don't have a lot of the public data. And
Very
so,
cool.
last couple of points. I think one thing that's important to look at is that the backlog of builders, at least the 10 largest publicly traded that I have here in this chart, they're
Way
pretty
down.
much back to pre-pandemic levels.
Pretty eye
Uh,
opening.
I think that's notable. So it means they have less risk.
Hmm.
Um, Here's the stocks of the 10 biggest publicly traded builders, definitely rolling over for the year now
Hmm.
a bit. But still, they've bounced off that bottom in a pretty spectacular fashion this year. Here's the S&P 500. So of the 10 biggest builders, only one of the 10 has had a shift in share price over the past 3 years that it underperforms S&P. That's pretty much the big gist of our chat. And he was just saying the barometer we'll keep an eye on is inventory levels. If months of supply starts to tick up in a hurry, you stop raising prices and focus on selling homes.
Folks, at the end of the day, these are wonderful articles you should go get. You should follow Lance on Twitter or X. Lance, how can people find you?
They can find me at News Lambert on Twitter. Google Lance Lambert. In Google, you'll find my author page, or they can come here every Thursday.
Thank you, buddy. I appreciate you. Go Bengals, huh?
Yep, Who Dey.